Welcome to another episode of Money Majlis, the show where global finance, technology, and leadership meet real-world practice. Today's conversation sits right at that intersection as private banking and wealth management face perhaps the biggest inflection point since open architecture and open banking, the era of AI-native, platform-driven wealth tech. Around the world, advisors are grappling with the rising regulatory complexity, intergenerational wealth transfer, ultra-demanding clients, and margin pressure, all while new AI tools promise hyper-personalized advice, straight-through digital journeys, and real-time risk management. To unpack all of this, my guest today is someone who has lived both sides of that equation. As a global buyer of technology at a universal bank, and now as a builder of next-gen fintech platforms. From running operations and technology for tens of millions of customers across more than 55 international markets at Citibank, to leading AI and wealth platforms used by some of the world's largest financial institutions, Banesh Prabhu brings a rare 360-degree view of what really works, what is hype, and how institutions can execute at scale. This conversation will dive into the state of wealth management technology globally and the GCC, the practical application of AI in private banking and wealth management, the story of Intellect Design Arena's AI-native platforms, and the leadership lessons from a career spanning India, the US, Europe, and Asia. So sit back as we explore how AI, cloud-native architectures, and composable platforms are reshaping the future of wealth, and what that means for private banks, family offices, and affluent investors in markets like the UAE and the GCC. But first, a message from my sponsors.
Money Majlis is proudly supported by Now, the premier crypto-as-a-service provider, now building in partnership with the top financial institutions in the Middle East. Discover more at aquanow.com.
Money Majlis is brought to you by E&, a global technology group.
Money Majlis is brought to you by Intellect Design Arena, driving digital adoption in banking and insurance.
Money Majlis is brought to you by Live Digital Bank, powered by Emirates NBD. Trust and innovation combined.
Money Majlis is brought to you by Network International, the leading digital payments technology company in the Middle East and Africa.
Today's guest is Banesh Prabhu, CEO of IntellectAI, the AI and Analytics division of Intellect Design Arena, a listed Indian fintech that describes itself as one of the world's largest cloud-native, API-led, microservices-based, multi-product platforms for banking, insurance, and financial services. Intellect today works with over 500 financial institutions globally, including a strong concentration of Tier 1 banks across North America, Europe, India, the Middle East, and Southeast Asia. Its platforms support a wide range of banking and financial services domains, spanning retail and corporate banking, transaction banking, risk, and treasury, as well as insurance, wealth management, and capital markets. In recent years, Intellect has increasingly focused on AI-native platforms, including the eMAC.ai and WealthForce.ai platforms designed to support large-scale regulated financial institutions as they modernize their operating and engagement models. Banesh is a fintech services veteran with more than 3 decades of senior global responsibility in operations, distribution, and technology, including about 23 years at Citibank. At Citi, he rose to become the global COO of the International Consumer Bank, responsible for servicing around 50 million clients in over 55 international markets, managing more than 35,000 employees, and an operating expense reportedly in excess of $3 billion. He has also been a senior advisor with Boston Consulting Group, BCG, and an active fintech investor and fund partner in the UK, bringing a practitioner investor lens to innovation. Banesh served as chairman and CEO during the early stages of Orion Pro Solutions, and since 2016, he has been associated with Intellect Design Arena, first as chief strategy officer and senior advisor, and since 2020 as CEO of Intellect's insurance, wealth, and capital markets business, now branded IntellectAI. Banesh, welcome to Money Majlis, and welcome back to Dubai, a city where you have lived in the 1990s. Like me, it is a pleasure to have you join this important conversation on the state and future of wealth management technology. Banesh, first off, what are the big differences you see in Dubai of today versus the city you lived in the mid-1990s?
Yeah, firstly, hi, Suvo. It's a pleasure knowing you for so many decades, actually, in various different relationships that we've had. When we were here in the 1990s, Dubai was always a fantastic space when it came to the way in which things got done. But if I think of Dubai then and Dubai now, it always had great infrastructure, but this is now world class. The way in which the infrastructure is developed, and when I say infrastructure, it's just a variety of things, not just financial services, technology, but overall infrastructure in the country. So that, to my mind, is an amazing trend that I've seen since I was here in 1990. The other interesting thing is it's really open to do business. Now, the way in which over the years, and regardless of the challenges in COVID or not during the pandemic, the way it was open to do business, and it continues to be a place where people can come and start easily and do business without any kind of constraints. So that I continue to see is a massive driver over the last few years and continues to be one of the most important things I can see why so many millionaires from all over the world end up coming here to do business, because this is a fantastic place to do that.
Absolutely right. Absolutely right.
And the other piece that I wanted, we sometimes feel it was a regional hub, but I think it's now a global hub. In many matters, it is a global hub for several things, and the type of investments it's doing in high-end technology, data centers, and way it is creating
and AI.
AI.
Yep.
And this AI push recently, which we'll be talking a little bit more about later on, I think is fantastic, and it's always done it with a certain amount of governance. Because I think governance and technology all has to come together so that you can actually help to ensure that customers and consumers are well protected in this sort of change that's taking place in the world, right? And we all know that AI is a fundamental change that we are going to see in the future, very much like the internet was when the dot-com started, and the growth from the dot-com to now, none of us can do without the internet. Similarly, I don't think anybody will be able to do without the AI. And will it be faster than the digital revolution that happened? I think it will. It took a long time for adoption in digital. So Dubai is extremely well placed, not just in GCC, but to be much above their weight across the world.
Banesh, we talked about the 1990s. Now, since the 1990s, global wealth has continued to grow. But the pressure on the margins of wealth managers has increased, with compliance costs rising and client expectations growing. From your vantage point across the US, Europe, and Asia, what are the three structural trends you think that are fundamentally reshaping wealth management today? And which of these do you consider truly technology-driven and AI-led versus business model-driven?
I think that's a fantastic point. So what we really see with clients around the world that we support in technology, and obviously AI and technology, I think the complexity has significantly grown, but compliance has also increased, because as more and more people enter the wealth management space, the need to ensure that you safeguard interests of trusted advice, the right advice for the right profile of customers becomes vitally important. So I think complexity has resulted in some pressure on margins, because a lot of the compliance coming with complexity is handled manually very often.
Yeah.
And it's not been so digitally evolved as one would have liked it to be. You'll see later on, we talk a little bit more. I think AI will fundamentally change the way in which you can handle those compliances. This is the whole governance, risk, and compliance space. The second thing about wealth is it's a very emotive business.
Yep.
The trust with the advisor, and this is, I'm talking about the high net worth, ultra high net worth,
Correct.
all the way to the private bank, right? Fundamentally, because it's an emotive business, it's trust led. And it's not a transactional one, though you have to do the transaction, flawlessly too. The trust will always mean that you need a combination of technologies to help the advisor
Yep.
rather than, just expecting the advisor to do things just on trust. So most customers stay with their advisor because they trust them. They've been, they trust them through years of experiences and various other things. Therefore, the ability to bring insights and intelligence to the advisor, I think, is a big shift. I think it's a structural shift that is getting more accentuated now than ever before.
And the flip side, Banesh, on that point, intelligence alone can't solve the problem, right?
No.
In the sense that you also need trust with the human connect.
That's absolutely right. And that's why, if you remember the term in the digital branch world of phygital, right?
yeah.
It's something that I remember
Correct.
you mentioning somewhere, right?
Yeah. So
I think this is a similar concept because it's a combination of trust and advice, but huge insights coming from AI.
So tech and touch both.
Absolutely. And I think the other most important thing is you're going to have to reimagine the business model. So if you think tech versus business model, the most important thing I think is you cannot get technology, you cannot have technology to fix a fragmented model. So you got to get your model right first, because without getting the model right, you're not going to get any technology or any sort of AI to help. In the case of AI, it's a huge leverage on quality of data too. So I would say that is another thing. The other thing with particularly what's happening in the world is AI is at a hype cycle.
Correct.
Now, one of the reasons of a hype cycle, what people say is there's a stagnation in old technology. And there's an ability for the whole world to recognize the potential opportunities that AI brings in the future, which is why we created a hype cycle. I mean, during the .com time, we had the hype cycle about the potential that the internet could have done, and it created a huge cycle. And of course, there's a boom and bust in every one of these hype cycles. I think year two, while there may be some level of corrections and the hype will come down, but what you will fundamentally change is the future of work. Because the way AI and human augmented intelligence will get together to be able to help every area of a business. For wealth, it will touch just about every key business outcome segment, whether it's helping institutions improve customer revenues, both for the customer as well as for their own institutions as a result of growth, whether it's helping governance, risk, and compliance to become more efficient. So it doesn't draw down. Most financial institutions in wealth have several issues to do with KYCs and AMLs and so many other compliances and regulatory guidelines that AI will actually help you manage that far more efficiently than before, right? And of course, cost efficiency. Most of the West struggles with cost-income ratios of a significant scale. How will AI actually help that? So these all, and of course, the fourth bucket being customer experience. The customer experience has to be better. And I think what we are seeing is people are moving to experience and outcomes. Because you got to have both. You can't just have great experience and not great outcomes. So I think that combination
But tell
becomes...
me on that point, Banesh, I mean, you talked about all the benefits, and most of them you talked about were efficiency-led. So essentially, it makes life easier for the bank, for the provider of wealth services, for the RM. So the shareholders benefit, of course, with more efficiency. Employees benefit with greater knowledge of the customer and better tools to use. But have we seen real customer benefits yet with AI?
Yeah, that's an interesting question, because it's the whole ecosystem has to, get better. So you mentioned various stakeholders, but the customer has to gain. So how will the customer gain, right? The customer, so it all depends in wealth management which segments you're dealing with. If you go to the mass affluent segments, right? And the certain type of Gen Z type of people in that segment, they wanted to do it yourself experience.
Yeah.
They want to be able to log in, choose certain goals, balance those goals, have investments seamlessly done.
Yeah.
And this is very much like some of the large players around the world where they've created curated baskets of products where you could put small self-invested sort of investments, like
even robo-advisory kind of
robo-advisory type of platforms. And that combination actually makes it frictionless and seamless at different stages for the mass affluent, but it also has a business outcome.
Correct.
And it gives them insights into the business outcome. These are many of this is curated through AI in the background. So that's one benefit. They'll have access to things that they never had access to because they did not have the intelligence to help them choose in a do-it-yourself model.
Correct.
If you go up the chain to high net worth and ultra high net worth, the relationship manager and updating him actually helps the customer have greater insight into opportunities and also balancing the risk. Because very often, there are times where you can have volatility up and down.
Yeah.
And I think during those times of volatility, it's extremely important. Clients don't call apps.
Yeah.
They call they call their RMs or they call their banks, right? And I think, therefore, it's important for us to be able to give the human reality to AI.
Yeah.
It's always going to be an augmentation one. There are several areas that could be autonomous, okay, where processes could be pretty much straight through. But the ones that really involve the type of discussions that a customer has, like I said, the emotive type discussions, will always require human in the loop.
So like somebody said the other day, AI should actually stand for augmented intelligence, not artificial intelligence. Right? So that's what you're talking about, right?
Yeah. And you see, the term AI, the term artificial itself is an interesting point. But in many operational processes today, we have augmented intelligence. Now, if you ask somebody an autonomous car, okay, without a driver, that's already there in many places, right? It's autonomous, it's great. Great level of intelligence and AI coming together to actually operate it with. So I think what's very important at least in financial service and wealth management, that there are certain things that could be autonomous, but most of the operational processes have not reached the level of maturity, because this is level of maturity. Just like in an autonomous car, along the journey to reach autonomous, you improve the quality of the car, you improve the quality of the driver, and you did so many things to improve the driver. So think of it like that we've significantly improved, the relationship manager or the bank personnel to deal with customers and help the customers to become more efficient.
Correct.
Will I eventually end up in a situation where I'll have an autonomous RM? I think we've not reached that barrier yet, right? Is it the art of possible? It could be anyone's guess. There'll be a whole bunch of people who may believe so. But based on our experience, even in the digital world, there were certain areas that required the human interface. And I don't think, we would expect all of that to go away in wealth for sure.
Now, Banesh, many studies now talk about over $100 trillion of wealth transfer, the great wealth transfer globally. And therefore, a new cohort of digital native clients, you talked about Gen Z there, demanding hyper-personalized 24/7 service, whether it's millennials or Gen Z. How effectively do you see the incumbent private banks and wealth managers responding to this in terms of the next-gen private banking clients and using AI from behavioral analytics to next best action engines to serve this new segment? Or are you seeing gaps in this area across, aspiration and execution?
Yeah, I think obviously there are some gaps because fundamentally for AI, you need to use the power of data.
Yeah.
And many of them have a lot of data. I mean, all of us in financial institutions have invested so significantly in warehouses and lakes and stuff.
Yeah.
But if you simplify and you think broadly, three sources of data, right? One is your own secure financial data that a customer has with an institution. Then there's a lot of market data which comes together, right? And many people put this together into the lake.
Yeah.
But the third category of data, which really AI has done a phenomenal job, is in the unstructured data. This could be policy data, it could be document data, extracting that and bringing it together with the other data segments. And from a technology perspective, using that as insights.
Yeah.
For various people. These insights are not limited only to relationship manager. It related to compliance groups, operational groups, even product and marketing groups to decide how they want to position new products that are relevant in the market. So we call it in Intellect, call it the knowledge garden in our platform. Our AI business impact platform is Purple Fabric. There, Purple Fabric's most fundamental thing is how the knowledge garden can empower and in a secure way manage the data of institutions, and also within institutions, as you very well know, each person's private data is not viewable by everybody. It's only viewable by certain people who have access to it. So the management of the security of the information and bringing the power of AI to give not just next best actions, but in the case of a financial advisor, managed his whole day of managing his customer interactions with greater efficiency, including knowing all the discussions that they've had with the customer before, a lot of the experiences of the customer, what the customer has said, call reports of the past, bringing it together. Because very often when a relationship manager goes to talk to a customer, they take a statement of account and have some insights based on their own analysis. But here those insights can be actually far more personalized and far more relevant to have a very meaningful dialogue with the customer.
So is Knowledge Garden a fancy new name for data lake, or is it different?
It is actually technically, we vectorize the data, which has a lot more information. Normally, the data lakes never captured a lot of the unstructured data. There was a lot of market data and internal data. But the power of today's technology, using some of the language foundation models on this data, is what has created the power of ChatGPT. So you can ask yourself, a Copilot or a ChatGPT or a Gemini, right? They all do that. But in a secure way to do it with your own transactional data and have ready questions to ask. So you're almost having a chat with your own data, your own knowledge garden. And you can have multiple knowledge gardens, right, in an organization. For example, I could have a regulatory knowledge garden where all regulations are extracted and stored, and you can actually test your products against those regulatory things. Are they compliant? Are they not? What's the type of customers that can use that particular type of product? So there's a lot of intelligence opportunities that the knowledge garden would bring. And it, of course, involves a whole bunch of technology to bring the data to that level of vectorization. And you know what? There are multiple data platform people who are building that base, but we're bringing the intelligence on top of it.
So you moved from a warehouse to a lake to
So
a garden.
warehouse would traditionally be a lot of because most banks have they have a lot of what people would call a vendor sprawl of various vendors with various data models. They brought it together in the warehouse. There's always a mismatch of the data because different products, data models get updated at different times for different purposes. So when it comes together, it needs to be put together. But the lake came in when you brought in a lot of the public data too.
Correct.
Right? And the market data, and that came together. But now you're bringing unstructured data, but you're vectorizing the data in a way that the garden can actually create the knowledge base for your future. So that's one important part of that whole equation. So the day in the life of the relationship manager is fundamentally giving you insights and knowledge through a lot of these data knowledge garden insights that come in.
Correct.
There's this completely different side of AI, which is the agentic side. Intellect calls it the digital experts. Why? Because multiple agents work together. So I think fundamentally what we're seeing is this area is only now gaining a lot more attention than it has. Now, when we all grew up hiring people and giving them a job description, sometimes training them or hiring experienced people who were already there, they had their own knowledge, their own experience. Think of now hiring a digital workforce, an AI agent. And you're almost hiring an AI agent and a workforce to replicate what the human does. But to do it versus a knowledge base that's a lot richer than just our individual knowledge bases, right? You're tapping a much larger knowledge base for a digital workforce to collaborate with the human workforce. So that the outcome, the business outcome of that, which is again going back to the 3-4 things that I mentioned earlier, is significantly better because you have tapped to more insights. Now, are there gaps? People have to fix some of their data and their vectorization of data on one leg. Second is, like Purple Fabric, while it's got, more than 200 plus different technologies coming together, it orchestrates your vectorization of data to create the knowledge garden, along with multiple digital experts in different areas. So you could have a digital expert for example, we have for one of the largest wealth managers, a complaint management guy. He looks at information right from the time the complaint comes through emails and attachments, reads all that, compares it with the policy of that time of that complaint, and then actually helps the human in the loop to have all the processing done, connects to multiple systems, in a technical term, APIs to different systems, collects information, does all the reasoning. How does it do the reasoning? It uses multiple LLMs, the large language models, coming from all the large providers of language, Anthropics and OpenAIs and, Googles of the world. Language models are getting smarter. So the language model is almost one that is then used on that information to help the human take decisions faster. What sometimes used to take sometimes several weeks to assess and handle a complaint, today can be done in under 30 minutes. So fundamentally, productivity for complaint handling and completeness is just one example here. Right? There are many examples of different use cases in financial services that can touch operations, that can touch compliance. By the way, there are a whole lot on the customer experience side too. There's still an evolution on the voice side, whether people are comfortable to deal with an AI agent for voice. But for certain standard things, because even in our days in call centers, when we introduced the IVRs were basically ability for you to provide basic information.
Correct.
Here's your balance and so on. So a lot of that standard traffic went out without having to go to the agent, right? But without doubt, what went to the agent could be much smarter and information about the customer, what the customer wants, and potentially, cross-sell. In the old days, I used to always call it inbound sales leverage. So an inbound call coming in, you have enough insight through AI to do a sales leverage of the next product or a cross-sell or an upsell, which is fundamentally going to improve the whole dimensions of the relationship. People sometimes feel doing a call quickly is great, but research has always shown that having a chatty discussion with the customer, providing them solutions and opportunities to grow and their own, whatever their requirements are, whether it's wealth or savings or anything else, is a much better satisfaction than just doing the transaction and walking away.
But like you see now the advent of agentic AI in e-commerce,
Yeah.
Are you seeing agentic AI in wealth management as well, where the agent actually performs certain things?
Yeah, for operational areas.
Yeah.
In different areas of operations, whether it's onboarding, whether it's managing, order management, whether it's making checks and balances in the system, whether it's offering, so whole bunch of, so the other way to put it is there's a lot of stuff happening in the assistant space, which is the copilots of the world, right? There's a lot of information there.
Correct.
But the real combination, most of them are not achieving the business outcomes you'd like because it's good, but how do I really get business outcome out of it? And that's where the digital experts and the agents come together, because they actually can be set up just like human operations. And guess what? They need to be managed just like human operations. People need to be managed. You've got to keep your AI agents or the digital experts that help the humans also updated. They'll be updated with knowledge. They'll be updated with new data. They'll be updated with connecting to new systems. So I think that exercise of managing that workforce, the digital workforce, along with the human workforce, is going to be another interesting set of areas in the future.
Banesh, is not just about managing agents, it's also about governing agents. Because globally, regulators we are seeing are becoming more vocal about AI governance, model explainability, right? How to explain the models and fair outcomes, especially in areas like suitability, best interest advice, and products. Now, when you sit with boards of banks or CTOs and CROs of private banks, what are some of the, the top AI-related risk themes that they're most worried about?
Yeah.
And how do you see industry balancing innovation with fiduciary responsibility? That's the important bit, right?
I think that's probably the most important thing that today we deal with, right? Because again, going back to data, as I said, comes from different sources and comes together for the digital experts to work efficiently. Now, as you expand to multiple use cases across the spectrum, for example, our wealth platform, wealthforce.ai, another version is in very advanced stages where actually AI agents can do just about every job. You can actually, I wouldn't want to say, just like we had digital banks, can I have an AI bank, right? But for many activities, yes. But fundamentally, we've not reached that level of the autonomous car example. What we are saying is there is a lot of hallucinations, toxicity, and sometimes even what we ask of questions does not have necessarily the right response all the time. And I think regulators are rightly pointing that out. And they're saying the final responsibility for the quality of data, the toxicity and hallucinations need to be governed. So Purple Fabric has one whole layer out of its 4 layers. I talked about the knowledge garden. I talked about the digital experts. The third is obviously multiple language models. We help you benchmark which ones. But the most important one is as you extend more and more, agents and more use cases, you need to govern them. So Purple Fabric Govern is an important part of our stack because it brings in all, not just the management of the ethical AI layer on toxicity, bias, and things like that. We genuinely are at the point where it is important to have the human in the loop. Okay, humans must be the responsible ones still, and most regulators are anyway saying that. We also help build an audit trail, just like humans build an audit trail of what they do. Everything an AI agent does is also audit trail. So you have traceability of what they did. So tomorrow when you look at it internally as part of your internal compliances and operational risk checks, you also have regulators can look at it, internal auditors, external auditors, so they know that an AI agent just doesn't do it and the human is not responsible. So that is what is fundamentally an evolving space, right?
So Banesh, Intellect works with leading banks across India, Asia, and the Middle East, including several of the top 15 banks in the region. You also work in the US. From your client conversations, how does AI adoption and wealth management in the GCC and specifically in the UAE compare with more mature markets like Europe and North America? And what do you see specifically as the advantages of this region or constraints in adopting AI?
I think there are some pluses and minuses here, right? As you said. So one is, I think the regulators are much more open to platform-led change from an AI perspective. We're seeing a lot of that in GCC countries here, Saudi, and several of the other ones, Qatar and others. Decision cycles are much faster. Over here, you could take decisions much quicker. I would say there is less legacies and more ambition. So these are all positives. There are some constraints, like you said, right? One constraint is, I think, the data maturity and the ability to look at things from the eyes of data more efficiently in a financial institution. Earlier, the data teams used to do a lot of MIS and reporting and insights. I think the data skill needs to not just reside there now; it has to reside across the company. Data is going to be the vital thing, and the AI will need it, without which you can't do it. So that's one. Data maturity is one area. The second is specialist skills and talent. Now, the good thing about AI is that you can build an agent, I can build an agent. You don't need developers to build agents. So this is an interesting space. Once you get used to how agents are built, you could build them. But when you come to more complex processes where multiple agents and digital experts have to work together to achieve an objective, that requires some level of orchestration, which is again where the whole stack of Purple Fabric comes together, right? Because you need to orchestrate an end-to-end set of things. So I feel different skills and resources will make their way and different opportunities. Just like when the digital world started, you had new skills to build websites and apps and a whole bunch of things came out. Similarly, the AI world will bring in a different set of skills. And everybody will need to enable themselves with those skills. From a regional advantage, I think you have access from a wealth perspective to large capital pools and a lot of money. There's a lot of foreign, family offices, sovereign funds, and etc. Among the largest sitting here in the GCC space.
Yep.
How can they actually tap that and actually maybe best positioned for platform-led intelligence in the future? Because they just have access to a phenomenal amount of financial health, and they've got open to business to bring in anyone from the world, build the skills. And that's exactly, I think, what I'm seeing with the AI wave taking place in the GCC.
Yeah.
And of course, it's a journey, as I said. So adoption will have to happen, and it'll happen in pieces. And the other thing about the region that one has to be careful, because a lot of people who come into the region sometimes come with a slightly shorter term mindset.
Yep.
3 years, 5 years, and they therefore don't want to reimagine. They want to just tinker with existing stuff. You've got to reimagine certain models.
Yeah.
And I think the more people think slightly longer term on this, the better it is.
Now, Banesh, you've been seeing the UAE positioning itself as a global hub for family offices, for cross-border wealth and alternative investments. And the number of hedge funds that are set up in DIFC, for example,
enormous size.
in the last 3 years have been enormous. You've seen, close to 10,000 multimillionaires moving into UAE this year, and probably the same rate for the next 3 years, expecting 50,000 multimillionaires to move here in the next 5 years. Now, if you're advising a UAE private bank that wants to differentiate itself using AI and digital in the next 3 years, what are the 2 or 3 capabilities, core capabilities, that you'd advise them that they must absolutely build? Are these client onboarding journeys? Are these portfolio analytics? Are these RM productivity tools? What would these be to be region leading rather than catching up?
That's a very interesting question, because one of the things that, in Intellect we pride ourselves with is design thinking. This is an area where you could very simply skip into doing too many things. One of the most important principles we believe is less is more, right?
Yeah.
And how do we sort of really identify what to prioritize? What are the more important, pieces versus some of the smaller ones? I think, what are we seeing? We are seeing a massive shortage of financial advisors.
Yeah.
So the need to be able to make the financial advisor more efficient. And obviously keep building more financial advisors through combination of development and training, where AI will actually help them scale up a lot faster.
Yeah.
Because to get a person up the curve takes a long time otherwise. And therefore, one is an educational part of how AI can help supplement a gap in the RM to make him more efficient. Second is, there is a scarcity. We cannot run away with the fact that there is a scarcity, right? So I think that is one. Now, 2 is, again, it's about trust. So we believe that the seamless onboarding of cross-border and family office clients easily, managing large number of clients seamlessly, some with information directly available through a 360 type of view. Products are changing. You see over here, you're already having people offering a variety of commodities, cryptos.
Yep.
I think the portfolio of products and assets that we grew up is getting wider. And then there are certain markets where pensions and other type of investments also need to be managed very efficiently. So I think clearly that's one part. The other interesting part, particularly in the GCC, is wealth corridors. Now, what I mean by that, there is a significant amount of, professionals coming here from certain countries, whether it's India, Philippines, even UK, because a large chunk moved here.
Correct.
To create a corridor of their requirements between their home country and here seamlessly, fulfilling the right combination, is a vital marketplace of opportunity. And as more and more sort of DIFC type of centers start erupting, India started the Gift City sort of corridor, which is a very early stage. But that's another opportunity area that is interesting. So I think that's all important. Must have capabilities, RM intelligence and productivity tools to make the whole day in the life of the RM smarter and better than before.
Yeah.
I talked about the seamless onboarding. I cannot, underplay the importance of that. And this is not only about onboarding. This is about not at just at the customer level, but at the transaction level.
Yeah.
Booking, redeeming, whatever products. It has to be truly seamless. A lot of the money, because of trust, lands up in family offices, even though financial institutions, have taken that customer as part of it. The RM, when they leave and set up their own family offices or whatever, tend to take clients with them because of trust.
Correct.
So it's important for financial institutions to bring in technologies in a way in which when they leave, right, the customer actually feels the gap.
Yep.
Both of intelligence from AI as well as, platform capabilities. Otherwise they lose. They could lose a customer.
Yeah.
And we've all been in banks, and there are wealth managers. Wealth managers normally deal with more high net worth or private bank customers.
Correct.
But they take away customers from banks. They don't have maybe the challenges of a bank and the regulations and the regulatory stuff as a wealth manager. But on the other side, banks have the customers but can lose them. So the banks have an opportunity to scale up and bring in AI for their financial advisors to try and retain customers.
Yeah.
But the RM is at the heart of it, or the financial advisor, as we call it. Therefore, improving the financial advisor is important. So I would say don't go thinking that AI will replace RMs. It's the other way around. You will have more advisors. You will need to provide the tools to improve the quality of them, deliver it so your customers are not lost to the to the wealth managers. And then you got to reduce friction. There's a lot of friction. Clearly, we've seen in wealth the compliance friction is huge.
Yeah.
I think that friction and the order management friction, I think, could be another interesting set of areas here.
Interesting. Banesh, you are obviously working with multiple banks globally and drawing on the breadth of exposure you have. What consistent patterns are you seeing in how leading private banks are deploying AI today? I mean, where is adoption proving most real? Is it in front office advisory tools? Is it mid office risk tools? Is it back office automation? Which areas, according to you, are showing the fastest and most durable uptake?
Yeah, no, interesting question. By the way, this tends to differ by regions and possibly by countries. Most of the Western developed markets, there is a cost income issue on one leg, and the other leg is a compliance, because the advisory levels of checks with the regulations are a lot more stringent in Europe and UK and many markets.
Correct.
I think over here the standards on compliance is only going to go up.
Yeah.
With this becoming a global hub like some others, like Singapore has a lot of compliance things.
Correct.
Advisory checks, transactionary checks, what you can do for a customer as advice and what you cannot do based on a variety of risk profiles of the customers, etc. I think fundamentally, in my mind, that is important. So risk and compliance is easier to govern and measure using a combination of AI. We have also got to move away from isolated models to a more agentic AI model, which actually brings together a lot of areas that, look at your overall portfolio. For example, many of us have multiple banks or multiple wealth managers managing different portfolios of us. Leave alone at a global level, right?
Yeah.
For some, even at the country level. To bring that wallet together and to be, regardless of whether the wallet sits with you as an institution or not, but bringing it together for the advisor enhances the quality of experience for the customer.
Yeah.
And gives them a more holistic view to their wealth rather than just thinking about what is the money lying with me. So that's another important part. Clearly, front office, inputs definitely will further trust, sustain trust for the customer. Other than that, I think orchestration of workflows with the ethical AI guardrails, will be fundamental. Because otherwise, if you lose trust, you can lose it very quickly.
Yeah.
So if I can think of a couple of critical things, agentic AI is not equal to autonomy. Okay.
Yeah.
Humans remain accountable. And everything is explainable and auditable. These 2-3 fundamental things have to be built into the way we are not sacrificing, controls and everything that is our responsibility. As a matter of fact, in the UK and other places, there is the whole thing come out on consumer duty.
Correct.
This is your duty to the consumer. You got to fulfill it.
Excellent. It's a good time now to go for a commercial break. But before we do that, it's also a good time to talk about the social impact mission of this podcast. All profits from Money Majlis go to charitable causes, both regionally and globally. And in every episode, my guest gets a gift card of $1,000 to contribute to one of the 6 charities featured on moneymajlis.com. My guest today, Banesh Prabhu, has decided to redeem his $1,000 gift card for World Central Kitchen. As a listener, you can get your $50 gift card by simply visiting my website, moneymajlis.com. Please click on the charity of your choice, and I will transfer the money on your behalf to that charity. It's that simple, so I hope you will join me in my giving movement. See you after this commercial break.
The financial world is changing fast. Institutions need to meet the growing client demand for crypto financial services, but they need a battle-tested platform to build upon.
AquaNow is a leading crypto financial services platform, powering incumbent institutions to launch crypto brokerage, payments, and remittance services for their clients, securely and at scale.
Be part of the transformation. Visit aquanow.com today.
The end touches your life
in more ways than you can imagine.
You want more tech,
more speed,
more convenience,
more entertainment,
more business solutions.
EAN gives you all that
and so much more.
EAN. Go for more.
Parents teach their children to talk, to walk, to ride, to read. So why not teach them about managing their money? Introducing the all-new Live Light app, designed to teach 8 to 18-year-olds good money habits. A free and totally secure app designed for them that's always under your control. Top up their cards, set limits, assign tasks, and reward them with allowances. Download the LiveX app to open a Live Light account in minutes, and the first 50 dirham allowance is on us. Visit live.me today. Live Digital Bank by Emirates NBD. Trust and innovation combined. T's and C's apply.
Money Majlis is brought to you by Intellect Design Arena. Intellect drives digital adoption in banking and insurance. Leverage emac.ai, the most comprehensive, composable, and intelligent open finance platform for banking and insurance transformation. Intellect Design Arena.
The end touches your life
in more ways than you can imagine.
You want more tech,
more speed,
more convenience,
more entertainment,
more business solutions.
EAN gives you all that
and so much more.
EAN. Go for more.
Money Majlis is brought to you by Network International, the Middle East, and Africa's digital payments champion. We make business happen and economies prosper by simplifying commerce and payments. Trusted by over 250 banks, fintechs and telcos, and 130,000 merchants in over 50 countries. Bringing you tomorrow's payment solutions today.
Welcome back to this exciting episode of Money Majlis. Today we're talking to Banesh Prabhu, a veteran technologist and the CEO of IntellectAI. Banesh, your emac.ai philosophy and platform emphasize events, microservices, APIs, and headless architectures with AI embedded across the stack. Now, for a non-technical but financially sophisticated audience that I have on my podcast, can you walk through how this architecture actually translates into better wealth management outcomes? Say faster time to market, higher STPs, straight-through processing, or improved RM productivity, and any concrete metrics that you can share with us?
Yeah. Well, surely some metrics, but before that, I think, for those who don't understand, emac.ai is a way in which we can actually manage the technology in an organization. Well, it's got architectural connotations. It's the way we do things, right?
Yeah.
Why is it important? Because when the cloud came out, the technologies on the cloud fundamentally changed the way in which platforms could be operated. Many of us have worked in legacy organizations, and and in many markets, even now you'll find a lot of financial services in legacy old platforms sitting on-prem, right? emac.ai fundamentally says a couple things. One is every financial institution in every product line has a fixed set of events, and we do the same events. Now, very well as a cards person, I would do only these so many things in cards. You don't think of a new event, right? So
Correct.
the same standard set of events. How those events are done, very often in the legacy format, is they've done it their way. So would a bank X versus a bank Y do the same event the same way? No. And that's because of the stages of evolution that the bank has had in the way it has operated and their operational teams have done things. The microservices architecture fundamentally, along with the API connections of those microservices and events, both into the external marketplace as well as your internal architecture, because different products and different vendors, as we discussed earlier, have evolved, and therefore you need to connect internally and externally seamlessly. The APIs has been a fundamental bridge to make that possible. Over a period of time, the headless architecture is to help people consume it. Now, you know very well, digital banks start with this day one, while legacy banks progressively find it tough to move to that model, which is why customers sometimes feel a lot more comfortable with their digital banks. Now, there are many organizations who have a digital bank within their legacy architecture, and some others don't. The speed of change, the speed of managing change becomes much easier. Now, AI is an interesting thing because we fundamentally find that AI can help you manage your technology far more efficiently.
Even the legacy technology.
Even the legacy, because after all, once you have technology, you need to upgrade it at some stage. You need to continuously do change requests. So the ability of what we would traditionally call the system development lifecycle, all the way from product scoping through to identifying what I need to do, having the technology do the requirements and doing the testing, both internally and then the UAT and going live, right? Is a cycle, which is the development life cycle, as we would call it. That itself is up significantly for change. Because the more I use AI in different pieces of this, I can write code. I can test code more efficiently. I can even validate code against my existing systems that I need to connect to. I can validate code against my product requirements. Okay, I can actually identify gaps in the product walkthrough requirements. So there's a variety of areas that will actually reimagine the development lifecycle in its completeness. And that's where I think the combination of AI and eMACH in a way comes together for us in Intellect, for people to reimagine. And guess what? It's never easy to get rid of legacy one fine day. It is a progressive modernization journey. And AI actually helps you do that more efficiently than, humans. It's not like humans are not required, as I said earlier. Humans are required, but the pace at that change can be significantly better, and it'll get better even faster.
And how is wealthforce.ai different from emach.ai?
So wealthforce.ai runs on the emach.ai fund. So emach.ai is the base platform of all of Intellect's work. Wealthforce.ai is a wealth platform
that sits on top of that.
That uses the component. It's got events, microservices, APIs, and can be consumed headlessly for different people in the organization, whether it's financial advisors, whether it's customers, etc., to consume. Right. So Wealthforce.ai is nothing other than a name of a wealth platform of emach.ai. And the AI part in Wealthforce comes by various processes within the whole wealth system, whether it's the right from onboarding to order management through to accounting, compliance. The whole suite is managed through AI embedded for different operational processes.
And can you give us an example, Banesh, of how a private bank wealth manager in this region has used Wealthforce.ai to change the way that RMs work day to day, or processes have been improved? Is there an example that you can share?
Yeah. So couple thoughts come to mind. One is the insights the financial advisor has when they actually have the customer dialogue. The ability for them to be able to navigate, because otherwise they spend so much time getting portfolio views, creating dashboards, putting together comments, the ability to bring it all together. And this is a front to back digital platform that we're talking about, right? So the bank consolidated key RM workflows into a single RM view. So that itself WealthForce, along with the embedded AI, helps you do that. It covers model portfolios, order management, performance tracking, client information. By the way, wealth is one of those areas that has the largest amount of analytics of how you're performing against index. And while in normal banking, you would have a statement of account and some regulatory reports. Here, there is a significantly higher level of portfolio analytics and information that we run. And therefore, you want to change day-to-day for RMs to become more efficient. Otherwise, they take a lot of time to stitch all this together manually. So this bringing it together through AI-driven workflows actually helps them with various actions, including onboarding and trading and doing order management when they're talking to customers, right? So one of the things that WealthForce.ai has is for the RM to now have a mobile app on his phone of his whole portfolio of various customers, and then can drill down to customers. But when they actually talk to customers through the mobile, they can activate order management. So these are some of the important things. So it reduces a lot of administrative friction. And also it helps the independent checking that happens with the compliance teams, because normally what happens is there's friction in order management because then compliance has to do an order check, etc. So there's a lot of that can come together to help the end customer have a more seamless experience. So that's a combination of WealthForce as an example, right?
Got it.
And they're different areas.
Got it. Now, I believe in Intellect, Banesh, you're doing a strategic pivot from pure software products to platforms, with revenue being driven increasingly by SaaS, platforms, and AMCs.
Yeah.
Now, tell me, how does the economics of an AI-native wealth platform differ from a traditional license-based, wealth software? And for both yourself and for your banking clients, and what does it mean for the CIOs or the CFOs looking at the ROI from the investment?
Yeah, that's very interesting because, you see, there are fundamentally a license model and a subscription type of model, right?
Correct.
Now, the concept of having a software on the cloud that can be consumed for multiple institutions maybe is something that's not so prevalent, but for multiple family offices to actually access technology platforms on a cloud are easy. Now, the whole concept of license versus subscription, right? It's much of a CFO thing that I want to take a license and upfront I want to capitalize it, is one way to go.
Yeah.
The subscription model is I want to pay for use. For example, in Intellect, you can have the whole financial advisor platform, which is, for the financial advisor, or in some market, they call it the relationship manager. You can pay $99 per month for each RM and have the whole suite. Similarly, if you want the customer front end on the app, which we give you a headless app, the UI can be one of the institutions, or we can give you our existing ready off the hook UI. That's 99 cents per customer. I'm just giving you a subscription price based on a number of customers. So the subscription model can be transaction based, can be customer based, can be a variety of ways. So the ROI shifts from CapEx to operating outcomes and very often operational routine expenses.
So doesn't it work much better for smaller banks?
It does. So again, it goes back to tiers.
Yeah.
But it also encourages people to start quickly. Now, most of these subscriptions do have a minimum amount that you need because the basic infrastructure has to be up and running, but it is easy to get started. But they have to consume.
Yeah.
In our old days, we simply put, to summarize, I would say, we used to change the system to suit us.
Correct.
Right? You rather change our processes to suit the system because we do the same set of events. Why should we keep changing the system? Why should just consume it? So that discipline, the younger and the smaller banks as well as the new digital banks can follow a lot better than some of the larger ones. Yeah.
So in the spectrum of different models of expensing your IT, you are depending that banks will buy rather than build. But if there are CTOs or CIOs who want to build rather than buy, how do you address that?
Now, that's a super question because that's a problem we deal with many institutions, particularly the large tier ones. Right?
Correct.
They want to build. I've been in one large enough one to go through that experience, right? As a matter of fact, couple that have gone through the same story. My suggestion is you got to seriously ask yourself why I cannot buy and consume,
Correct.
and integrate an offer to customers. Because when I build, now there are extremes. I still know tier 1 institutions, one of them I'm presently dealing with in India, a large private bank that wants to build. And I say, why would you build? Because at the end of the day, every time you build, you're reliant on your own internal people to manage. And even if you buy, and then there's the buy and build, right? Where if the equation is good, I take and maybe build 10, 50. What do I want to build? I want to build only that 2% difference from being somebody else, right? That 2%, like we say again in design thinking, may be worth 200%. So I want to add that. But what is that? Is that a UI layer? What is it that really... Because most of the platforms all offer the same functionalities today, almost, right?
Yeah.
It's the differentiation on, and more on analytics and more on intelligence. Your differentiation is based on good quality of information. Will I price differently? Will I, or take greater risk? Those are the type of things that you want to differentiate and not spend time, building. Okay.
But I guess obsession on differentiation is what drives it, no? I am bank ABC and I want to differentiate with bank XYZ, and therefore I want to build and I make it so different that I stand out in the marketplace.
Yeah, but there are things like, let's say, we've all done cards in our life, okay?
Yeah.
You do a chargeback like everybody else does.
Yeah.
But the operational process of chargebacks, if I build, I will be different from what I actually... But chargeback is a chargeback, okay? Many events, okay, are standard. Onboarding, right? I will get the salary slip if I'm an individual and a few things, and I'll take a great decision, right? Everybody does that. Now you have the choice to have a different policy. You can say, I'll do, 2x of salary as a credit limit or whatever it is, right? You set your own limits on your risk. But the technology of being able to process an application
It's the same.
is the same.
So you're saying even with the WealthForce.ai standard platform, a bank ABC can differentiate enough from bank XYZ.
Exactly, right. And the best part about the EMAC architecture is that pieces are composable. You don't have to buy, the whole Ferrari, okay? You can actually buy pieces of it that are relevant, because what happens sometimes is some bank wants to not do mass affluent. I only want to do this. So the asset classes, the experience of onboarding, the financial advisor platforms, etc., can be wired together to deliver a focus on private bank. The best part about this, by the way, it can coexist with other wealth systems that are legacies that you don't want to change.
Okay.
So it is very componentized and very consumable as part of the EMAC.ai architecture. And therefore, the ability for you to be able to take components that suit your plan. Now, why don't you just consume them? Now you want to build, and I'm saying build, but build what you want to differentiate yourself, right? And we have too many clients in the West who have legacies forever, who have patched them to the extent there were clients who are saying, there are these 4 people who know what's happening in the platform and the others are not there. And there's a huge amount of, if you see statistics, many of them are aged people now. And there's a big challenge. And some of the technology that is written in is also very old. So I think you got to look at that longer picture and say, do I completely want to be, out of sync with a consumable EMAC.ai type architecture that can actually keep progressively getting upgraded along the way, right? And I think that becomes a big difference. And finally, value compounds data and workflows and intelligence. They all reinforce each other. Because data, the workflows and intelligence is an important component today because of what's happening with AI. And that all comes together with EMAC.ai.
So Banesh, your WealthForce.ai platform recently won the most innovative wealth tech solution award at the Global Private Banker Awards. Congratulations. Tell me, which of the features in that platform most excite you? And where do you think the industry still needs a breakthrough that even Intellect has not fully cracked yet?
Yeah. No, I think, I gave you a bit of an idea of the emac.ai stack, right? I think that's fundamentally quite unique. The way it's sort of put together and how it can connect events and stitch them together and orchestrate it using the power of the emac.ai architecture. And again, you can keep adding things, right? So there is a customer who wanted a very base system and then says, as my business grows in wealth, I will keep adding different products and different asset classes and different segments along the way. But to answer your question, still needs a breakthrough that even intellect has not cracked, is what you said. I think explainable AI is still a non-negotiable in wealth. And having AI that is fully explainable and traceable, I think is important. Contextual nudges work, but it has to be grounded in advisor judgment. So it's important that that combination of the advisor judgment and the nudges come together. Composable journeys should allow continuous evolution, okay? Because without that, you can go on composing new journeys and new products and services. Like today, somebody wants to start connecting to a crypto exchange. But then crypto has a whole bunch of other compliance and other checks that are going to come in the way in which they are handled. Then there are some hard problems. I think the adaptive experiences that remain governable are very important, because I think you should be able to govern everything that we finally adapt and do. Intelligence, we say, is easy, but trusted intelligence is hard. So this whole area around trust is important. And therefore, what's working for us is explainable AI and the whole ethical AI layer that I was talking about that complements WealthForce to be able to do things in a more efficient way. And most of our nudges are very, very grounded in client reality, because otherwise they can be disconnected. People just send messages out to mass people that, frankly, are not personalized at all. What's still hard? Making intelligence usable at scale is still something that we have to learn to do. We are in early stages of that journey. But eventually intelligence at scale is going to be vitally important for us. And then balancing adaptability with governance, I think, is the other last piece that I would say will fundamentally be important. So these are a couple of things in the market that I think are changing.
So Banesh, we'll shift gear now here and move to your own career journey and your leadership principles. You spent almost 23 years at Citibank, ultimately as the global COO of the International Consumer Bank, a big job. When you look back at those years, what were one or two transformation programs, perhaps building global centers of excellence or digitizing key processes, that most shaped your thinking about how to run technology and operations at scale for wealth and retail clients?
I think I'm just thinking as you're speaking about, those years, and it's a long journey, right? We had the benefit of being there in the internet .com time before it started. So we go back to the days where we almost moved from manual stuff in many countries that I was involved in to automation. And then came the .com, right? We are seeing the bubble now of AI, just like the .com, which is fundamentally the next level of change. And as I was saying earlier, the old technology is stagnating, which is why you have now the expectation of the next level of technology, which is AI.
But you called AI a bubble. Does that mean it'll bust sometime? Is that...
Every bubble busts. Question is, who are the winners and losers of it, right? And the bubble of .com had a lot of new companies and a lot took a heat. The bubble of today is by the big techs who have significant amount of cash and others, and may be able to sustain bubble damage a lot easier. But there are a lot of other companies who are in the same stage as what it was in a .com who may not be able to survive that bubble, right? But why is there a bubble, right? There's a bubble because people believe that technology is moving to the next stage of evolution. Which is why everybody has a fear of missing out and is investing, and there's some crazy valuations there, right? So But going away from the bubbles, right? And thinking of the journey. And the simple way of putting it is that I've been involved in early stages where in some countries we put first ATMs, which never existed in the country, which is difficult to comprehend today. And even there, to convince people to use the ATM required adoption.
Yeah.
We had to take people, try them out on the ATM a couple of times. After that, they'll never go back to the teller. Right? We've seen moving from branches to call centers. Okay, at least in my years in Citibank, Citiphone was a big thing, and I used to sort of cover it for pretty much all the countries around the world. Limited branches. Okay, in the old days, somebody would call it an Air Force strategy rather than an Army strategy. Army being the branch and Air Force being remote.
Correct.
Every phone being a branch was a position at that time. I have gone to regulators to get permission to set up a call center 24/7. They said, why the hell is a bank wanting a 24/7 service, right? I mean, that's normally in hospitals and other places, right? And the call center fundamentally serviced most of the customers, at least, as we've seen. And then the call center moved to the IVR. There was another level of technology change.
Correct.
And a lot of doing end-to-end IVR became a big deal. So that was another stage of technology evolution, and making that call center agent more efficient, even without AI in those days, was a painful task to improve their average call time, their average handle time, and after call work, and all these sort of things, right? So I've seen that evolution of these channels, and it then landed up with omni-channels.
Yeah.
So you have consistent experience and continuity when you went to different channels, right? But if I think of operations and technology, there were 2 or 3 principles. One is when you did a lot of countries like I had to cover, right? We created hubs. Why do we create hubs? Because they were most cost effective. And in many markets, we did not have scale.
Correct.
So we created, if I remember, there were some 16 odd hubs that were created. And we used to call them language hubs because we had to deal with multiple languages.
Yeah.
So these hubs ensured standardization. So one part of what we did was migrating to the hubs. Some level of labor arbitrage in cost and stuff, right? Second was standardizing process at hubs a lot easier than getting every country to standardize or every branch to standardize. So migration and standardization was important. Even in those days, automating was important. Because automating stuff, because this is all part of the digital world. Getting people to move to the internet, because then came the internet, by the way. After the call centers, IVR, you had the internet. And then the internet landed up with the smartphone. So that is a evolution. Now all those channels are up for getting enabled through intelligence and AI. So it is a journey. In my career, I've sort of seen this journey. But I must say that the most important thing here is about people and leadership. Because all this has to happen. You need the right, people and leadership. We often create a lot of interest, but adoption takes time. And AI is actually at the stage, very early stage of that, because people have to see what does it do for them. And people are still expecting 100% performance from AI, which is not happening. It will achieve a certain percentage, but always require the human to finish the gap.
Banesh, you worked out of multiple geographies. You had long stints in the Middle East, in the US, and Europe. And then you moved to an executive committee role at the Siam Group in Thailand, driving technology and operations for a leading universal bank. Tell me, what did that Asian universal banking experience teach you about the speed of change, about digital adoption and consumer behavior that you now apply when advising Western private banks on AI?
To me, spending all my life in global institutions, before Citi, I was with American Express for 3 years. It was very different for a large local bank because every decision is taken in that place, in that city, number one. And it's therefore much faster than having to go to, a London or a New York or some, The biggest thing about complexity is that when you create multiple layers at region level, at clusters below regions, because those are all overheads. And for me in operations and technology, managing to ensure that the region and any clusters, small clusters of multiple countries, don't have too many resources is very vital. Because the actual business gets done in the country. And the actual business is about who's the competition in the country, what is the pricing in the country, how do I engage customers and build sustainable. After all, my years is all about managing customer experience.
Correct.
If you manage customer experience well, we grew up being told in the early years, revenues would follow, stock prices would follow, everything would follow on great customer outcomes.
Very
right?
true.
And many others came and said, I did inorganic and I acquired and this, that, and I pushed my revenue. But the fundamental concept of the product and the customer experience across that is vital, right?
Yep.
So I think what I found with Asia, number one, decisioning was therefore faster. Number two, they take a much longer view to the thing, right? In other places, it's a capital allocation to a country. In this case, it is, I'm going to be here forever as a bank. And therefore, I take a much longer view. And the small sort of foreign institutions that come and go, right? They've been disappearing over the years because the local institutions have actually moved far ahead of these multinational global institutions. So, and customers adapt faster, than banks can well expect. So I actually saw a lot of this. And I think digital first journeys can really scale trust a lot. And therefore, if you focus on only a specific market and a set of things, it's much easier to make change happen. So I would say, my experience about a large local bank, actually you cannot say a little more regional, but even those regional banks are primarily home country.
Correct.
Yeah, they have presence in a few other countries, but it's like a 95% or 90% in their parent country. And therefore decisioning and all is a lot sharper.
Absolutely.
And you've been there before, yeah.
I've been there before, having worked in multinational banks and then with Emirates MBD.
Absolutely.
It's very different in terms of speed of decision making and accountability. Both.
Accountability too, because the buck stops at you right there, right?
Absolutely.
While in many of these institutions, you have 8 people signing and nobody knows where the buck is. Yeah.
Banesh, you now lead teams that combine deep domain expertise in wealth, capital markets, and insurance, spread across multiple regions. What are your core leadership skills or principles for building such cross-functional, cross-cultural teams? And how do you ensure that innovation doesn't get disconnected from ground realities?
Yeah. I think domain, in our case, I would say products, leads, technology follows.
Yeah.
Right? But we do what the product is to be best in class. Product has to lead. We sometimes get caught up too much with sales, but sales without a high quality product delivered well is, cannot sell. Really.
Agreed.
Shared accountability across regions. Therefore, we shouldn't be deviating significantly on the product. We should do the right thing for the market and decide which markets to play in, right?
Yeah.
And like I said, a lot of what we do is very standard, though it may be done slightly differently in different countries. Innovation stays close to operations and regulations. So I think we have to ensure that people can innovate, keeping in mind the regulations and the operations, but most of the time it's pretty standardized across, right? And of course, AI is going to augment judgments, even though humans stay accountable. So I would say that will be a fundamental principle that will be relevant going forth. And there is a new way the organization is slowly getting structured in the AI world. It's becoming more diamond-shaped than pyramid. Because you need a lot more expertise, and a lot of the standard jobs down the line are done by AI. While in the old days, you had a lot of people doing stuff and you had a hierarchy coming upwards.
Correct.
So this diamond versus pyramid is another thing we are beginning to sort of start, looking at.
Well said. Now, Banesh, before we close, I have a few fun rapid fire questions for you, which are just short answers, no overthinking, just to get us to know you better as Banesh the person, not Banesh the professional. Now, Banesh, you once managed operations across 55 markets, 35,000 people. If you had to pick one everyday habit or productivity hack that kept you sane during that period? Something you still use today. What would that be?
Ruthless prioritization.
Uh-huh.
Because I have to know what I'm playing and what is the problem and what is my priority. In design thinking, we say that everything is fixed into 1,000 grams, 100 grams, 10 grams, right?
Correct.
I can't be stuck with all the 10 grams or the 100 grams if I'm missing the 1,000. So what are those? And prioritize, right?
I like the word ruthless, yeah.
Yeah.
Now, Intellect has clients today in roughly 97 countries. Which geography or client segment has surprised you the most in terms of how quickly they embraced AI in wealth management, and why?
Mid-sized banks in Asia and Middle East, mid-sized, second tier, smaller ones will have to find their mojo. They have an opportunity to change a lot.
Yep.
They actually can leapfrog gaps in their technology and in their digital efforts by moving more aggressively, in my mind, to AI. They're more willing to experiment and move faster than some of the Western institutions, partly because of the Western institutions' legacies. So I think Asia and some of the tiered banks or even potentially digital banks, and maybe, like I said, in the future, you'll have a new category of AI banks.
If a private banker in Dubai invited you out and you had to choose between a long run on the beach, Dubai's lovely beaches, a great South Indian meal, or a late night coding session with your AI team, which is the one you're most likely to pick these days?
I think I'll go with the long run on the beach because I'm a great one with water. I feel comfortable. It soothes me. It gives me a lot more balance. And I think based on all that we are reading and seeing and the change that's taking place, right, nothing is more calming than that.
Finally, Banesh, if you were not in financial services or technology, what alternate career could you most realistically see yourself in?
I think they're all in the same category, either a teacher or a coach or a mentor, somewhere in that cycle, because that gives me the most amount of satisfaction.
Banesh, this has been a fascinating tour through the realities of AI in wealth management. Thank you for all those insights, for sharing both the big strategic picture and the very practical lessons on architecture, on adoption, and on leadership. Any last comments from you?
No, I think we're going to be challenged with the future of work. If you look at many of the godfathers of AI, they'll say, we got to nurture AI along the way. We always have a threat that AI will control humans.
Correct.
If we don't nurture it well enough. So we're going to be in a completely new territory. It's going to bring enormous opportunities for people rather than just assuming that it will, impact jobs and stuff like that. I think it'll create a whole bunch of different jobs and different opportunities for people.
Yeah.
People will have to step up and some will just consume. It's going to be truly exciting times. And needless to say, it's touching every industry.
Yeah.
Your health, your DNA, your everything will have the power of AI, helping you to get, to become more healthier and happier.
Very well said.
Money Majlis is proudly supported by Now, the premier crypto as a service provider, now building in partnership with the top financial institutions in the Middle East. Discover more at aquanow.com.
Money Majlis is brought to you by E&, a global technology group.
Money Majlis is brought to you by IntellectAI Arena, driving digital adoption in banking and insurance.
Money Majlis is brought to you by Live Digital Bank, powered by Emirates NBD. Trust and innovation combined.
Money Majlis is brought to you by Network International, the leading digital payments technology company in the Middle East and Africa.
For listeners, whether you're running a private bank, building a family office, or simply curious about how AI will shape your wealth experience, there's a clear message here. The future will belong to institutions that can blend trusted human advice with intelligent, explainable, and well-governed AI platforms. If you enjoyed this episode of Money Majlis, do follow the show, share it with a colleague or a family member, and send in your questions for future conversations. For past episodes, please do visit www.moneymajlis.com also to join my social impact movement. Until next time, ma salama. Stay curious, stay well, and do good.